Miles Shipside is the commercial director at Rightmove. Miles, thank you so much for coming in. It does seem incredible every time we talk about this. Despite everything that is going on in the economy, it seems that actually London home prices can do no wrong. Asking prices are going high because of what it's just considered a haven, a safety asset.
That's right. You've got a combination of the safety asset, but also a shortage of supply combined with that too. So property listings down 7.7% on the previous month. So we're going into the autumn selling season with a shortage of property, down 12% on the same period last year as well. So the supply is actually getting tighter, and at the same time people are looking to put their money into something tangible, such as bricks and mortar in the UK's capital.
But Miles, this is what, foreign money coming in and saying, well, I don't really want to play the stock market right now, I don't really know what currencies and commodities are going to do, so I'm going to buy a house. And is it a buy-to-let kind of scenario, or is it just more people coming into the capital looking for a home where they can live in?
It's a combination of both, and some of the foreign investors aren't actually worried about a great return on their money in terms of rental income. They're looking for a safe haven for their capital. So it's that, but also obviously the business empire in London. It means there's continued employment, so more people wanting to buy homes to live in as well. And if you look at actually those prices, up 7.2% on the year, but actually in the 3 years since the collapse of Lehman Brothers, up 8.5%. So it's actually performed particularly well this year in the teeth of the Eurozone crisis, as opposed to perhaps the previous couple of years. But the 2005 to 2008, they went up 40% as well. So overall, a good investment over that period of time.
So September asking prices were up some 2.4%. Is this a trend that we're going to expect continuing? Are we going to see 2% increases almost every month, or is it going to be a little bit more subdued during the winter months?
Well, obviously it does depend on world economic events. Sometimes if there is a major shock to the market, it can actually send some jitters through the London market. But underneath it all, if there is that shortage of supply coming to the market, and with foreign demand, let's not forget that the pound sterling has been devalued over the last couple of years. So it's actually keeping London prices attractive, combined with that shortage of supply as well.
And it's still quite difficult actually to get a mortgage approved. Are these cash buyers? Do you have any idea of do they just put a big wallop of cash on the table and say, right, I want that flat, I want that house?
Absolutely, and one of the reasons why London is stronger from a domestic point of view is that with the mortgage famine in the UK, more buyers are cash. So you've got UK-based cash or high deposit buyers, as well as obviously the foreign buyers, and allegedly agents tell us that quite a few Greek buyers have been coming along as well.